Jaipur as a city is a marvelous blend of sights, sounds and experiences, which makes it amongst the world's most popular destinations for celebrations and weddings. But what are some of the challenges that small businesses face in their attempt to survive a deeply cyclical, seasonal and tourist-driven economy? Well, we caught up with industry experts at the Leaders of Tomorrow Springboard here in the city of Jaipur to find out. On the show tonight, in the first segment, we catch up with the head of startup banking at IDFC FIRST Bank, Bhavesh Jatania. And then we'll hear from the certified financial planner and director of Ark Primary Advisors, Hemant Beniwal.
India envisions becoming a $1 trillion tourism economy by 2047, and Rajasthan is at the heart of this dream. Known as the cultural capital of India, this state is a true traveler's paradise, bringing a rich blend of history, culture and hospitality to the forefront. With millions of tourists flocking to its royal cities, the state has seen growth in jobs, local businesses and infrastructure. And Jaipur, the Pink City, is leading this charge to fuel tourism growth with its rich traditions, vibrant culture and stunning architecture.
It's been 3 days. I'm in Jaipur and I have visited City Palace, then Nahargarh Fort and then Amber Fort, then Hawa Mahal.
From artisans selling handicrafted textiles to luxury hotels hosting global travelers, Jaipur and Rajasthan are thriving. The state's tourism contributes billions to the economy, creating jobs and boosting local businesses.
अच्छे फोर्ट इंडस्ट्रीज बड़े-बड़े होटल्स सब जयपुर के अंदर आ रहे हैं। तो जयपुर एक अच्छा टूरिज्म पैलेस के अलावा एक बिजनेस ग्रोथ के लिए बेस्ट पैलेसेस है।
With India's goal to reach a $1 trillion tourism economy by 2047, Rajasthan's rich heritage and Jaipur's growing infrastructure are key drivers in this transformation. The dream of becoming the world's top tourism destination is within reach.
It is majorly contributing for tourism, mainly is what I feel, because you can see a lot of foreigners walking around and then they prefer to come to Rajasthan.
Tourism in Rajasthan is not just about travel. It's about economic growth, global connection, and shaping India's bright future as a tourism hub.
Good evening, ladies and gentlemen, and the leaders of tomorrow present in this space. This is a beautiful setting. I must say thank you to the hotel who's organized this, right? I'm so happy to be here. Such a beautiful setting. Two key important pillars of Rajasthan's economy today: the startups, the emerging business that we're talking about here, and tourism, which is the lifeline of Rajasthan in that sense, right? And we've seen many travel tech startups coming in from this space here. So we know Rajasthan is about 7th largest in terms of economic GDP contribution to the country today, about $180 million, $180 billion, so to speak, in terms of economic size, and the government is looking at actually doubling this in next 5 years now, right? And as they say, on the path to 1,000 dreams, you must look for realities. Largely, the sectors which are contributing to the economy is services. 45%, almost half of the economy is services sector, and the other half is split between industries and agriculture. Rajasthan's been the largest producer of wool. Almost half of wool that's produced in India comes in from Rajasthan. On the agro-processing side also, we know it's one of the leading producers of millets and organic foods. It has the largest installed capacity in terms of renewable power, in terms of automotive and EVs, right? Again, one of the leading players with lots of auto component manufacturing based here, R&D centers of large corporate India, automotive India here, right? That apart, we also have EV sales which comes in from Rajasthan, which is almost about 6%. Rajasthan, apart from the industries that we spoke of, right, is home to about 9 UNESCO heritage sites. 9 UNESCO heritage sites, right? That's the largest any state has in India, right? And the state that I come in from, Maharashtra, is the second largest in that space. But Maharashtra has almost 3x of foreign tourists traveling. A lot of those could be business, but Maharashtra has 3x of foreign tourists almost traveling to the state, right? Vis-a-vis Rajasthan, which comes in fourth in the list of foreign tourists coming to India. Rajasthan, both in terms of number of startups, is now growing and growing really fast. We see about 5,500 DPI registered startups. An equal number of startups could be unregistered with the DPI at this point, but it's a thriving ecosystem for startups at this point, right? We see some of the key startups across sectors, and I spoke about travel and travel tech. Travel tech is one of the obviously favorite spaces in Rajasthan. But that apart, we see a lot of startups actually focusing on multiple areas, including enterprise tech and so on. Some of the key startups, or we call it startup Maharajas of Rajasthan, right? And if you see some good names there's one in particular that I want to call out is Haq Darshak, right? Haq Darshak is one startup which essentially tells you about your or which all government schemes that you can avail of, right? It essentially disseminates information on government schemes and help you essentially access them, right? And some very unique ideas, I see it that in terms of Rajasthan Studio, again, experience-led travel, one of the social networking sites focused on travelers in particular, right, called Voyage App, right? And some of these ideas are really, really great. And when we look at Rajasthan, the growth that we've seen in the last couple of years has been really stupendous in this space. All right, so let's come back quickly to IDFC FIRST Bank. And at IDFC FIRST Bank, we present in about, we have about 20 odd branches, 21 branches to be precise here, present in 5 cities. We have about almost 10% of Rajasthan's market share in terms of startup space, right? IDFC as a whole, we have more than 20,000 startups banking with us, and we have more than 30 unicorns who essentially work and partner with us in terms of various initiatives there as well. IDFC FIRST Bank is a new age bank, pretty much like this startups, which are new economy startups, new age businesses, right? The approach that IDFC Bank takes is a challenger bank approach. And let me kind of quickly explain you through what a challenger bank approach is, right? Challenger banks are the banks who are essentially, who came in, I call it the third generation of banks which got licensed sometimes around middle of 2015, middle of 2010s, right? And the whole approach is essentially to look at banking space, understand the problems that exist in banking space and how we can address the same, right? And that's what we do. Any of you use credit cards here? I'm sure most of us use credit cards, right? And when we say credit cards in India, are they actually credit cards? And I'm asking you a very fundamental question. Credit cards are actually payment cards in India, right? Which means they facilitate payment. Do you really use the credit of credit cards in India? You can't. You shouldn't. Nobody would advise, and we have financial advisors also here amongst us. They would also come back and say, please don't use the credit of credit cards. So Indian credit cards are actually payment cards in that sense, right? Because the moment you avail credit, you will end up spending it about 30% upwards, right? 30% interest rate upwards. For us, it's not so. When we look at IDFC FIRST Bank's credit card, ideally speaking, the credit that you use of credit cards is what? It's a personal loan given to you, right? So ideally, it should be charged at the same rate at which you would be eligible to get a personal loan in the market. So that's exactly what we do here in IDFC Bank. For us, the interest rate on the revolve of credit card starts from 9% upwards and is linked to your credit score, your CIBIL score, so to speak, right? So that was the space. So far, nobody had looked at that space, and that's what we started doing, right? When you're talking about savings account as a product's been in India for a very, very long time. Savings account is actually an account which is given to you, wherein you don't do your business transactions, you actually do your personal transactions. And it's meant to essentially help you save money, right? Okay. Which means that if you're saving money, you get some interest, some small amount of interest on your savings account, right? And that got deregulated some time back, which was pegged at a particular rate, but it's got deregulated now. But the savings account actually gave you interest on a quarterly basis all this while. Since independence, nobody's looked at the space and said, why should interest be given at a quarterly basis, right? Nobody's questioned that particular piece. But when we came to it, right, we are an EMI bank. IDFC Bank is actually a consumption lending bank, so to speak, right? Which means that we lend to consumers for various consumer durables, cars, and so on and so forth. And we in fact ask them to pay us on a monthly basis whenever they get their paychecks or income, right? So when we looked at the space, we said, if we are an EMI bank and we're asking you to pay us interest in installment on a monthly basis, it's just that we also pay you interest on a monthly basis. And that's what we changed. That's what, when I say challenger bank, that's what the approach is. You are business customers here. You are businessmen, you're leaders of tomorrow, right? Lots of you would be using your current account, right? And your current account, typically we know in India, interest payment isn't allowed. That doesn't mean that in current account you do not park your surplus funds. Mostly the surplus funds for all businessmen are parked in current account. Obviously, larger companies typically have treasury managers who manage their current account in such a way that every idle penny in the current account is actually deployed efficiently to earn interest. So when we looked at the space, we said, how can we do the same thing? We give you treasury management account as a small businessman. You don't need to manage anything. You just automate your savings into investments, right? Which means that anything above a particular amount in your savings, on your current account, is swept into a fixed deposit and gives you a fixed deposit interest rate there. And that's a beautiful product. A lot of banks actually have that product but never sell it actively. Pretty much like your term plans, which nobody sells your term plan actively, right? But we do so, and that's why I'm talking about it here, right? So when we say challenger bank approach, that's what we mean. We look at essentially issues in the space and address those issues through solutions. Well, so that's it. Thank you.
It's time for a short break, but our coverage of the Leaders of Tomorrow's Springboard here in the city of Jaipur continues on the other side. So don't go anywhere. Hello and welcome back to our continued coverage of the Leaders of Tomorrow's Springboard here in the city of Jaipur. We'll be joined by industry heavyweights tonight as they weigh in on the extent to which the city is embracing technology, supporting local artisans and promoting sustainability, all in an effort to promote the bigger picture, Rajasthan's global tourism vision. Let's listen in. In this country, there is perhaps a huge amount of discomfort when it comes to discussing finances, even within the close circle of one's friends and family. All right? How does one even begin to address that, and how challenging does it make your role as a certified financial planner?
Yeah, so thanks a lot first. You rightly said, and believe me, you are talking about groups like this or maybe friends. I'm talking about husband and wife, right?
Wow.
So even they are, in many cases, not open to discuss their finances with each other. We as a financial planner struggle a lot to bring them on the table and make sure they know their finances, okay? And these things are getting even more complicated with new generation. Okay, lot of couples, they want to manage their own finances. They are not interested it will be our retirement, it will be my retirement,
right.
It will be our house, it will be my house, right? So definitely there are a lot of complexities. So see, what we try to do is, end of the day, we try to focus on goals, okay? So, and 90% of the people are not aware about their goals, especially in financial terms. Yeah, they may be thinking about their kids' education, and these days a lot of parents are sending their kids to foreign, right? But they are not sure about the numbers, how it will work with inflation. And when we put those numbers and we try to tell them that, okay, these are your limited resources, everyone will have limited resources, and you have to contribute. Okay, both of you have to contribute to achieve these things, right? So I think this is one of the starting points But yeah, I mean, as you mentioned about groups and others, no. And people are not even looking for help. Okay. So again, it's a big challenge.
Well, another challenge seems to be, and perhaps this is just a perception, I think India is always considered to be a nation of savers rather than a nation of investors. And one isn't necessarily right versus wrong, but the mentality of ki FD mein paisa dal diya, Bhagwan bharose, perhaps is what really needs to change, right? So how do you, in your practice, attempt to have that reasoning resonate?
Still, there's a huge culture where people are only focusing on, say, fixed deposits. Okay, they are not looking at investments. Good part is all these, most of these guys are, say, business people. They understand that in case if you would like to participate in the growth of the economy, okay, growth of India, and I think the whole world is looking at that. I still remember when we were kids, we were writing that population is a boon or a bane, right? So right now, I think that's huge. Means a lot of these developed countries, South Korea, I was reading yesterday, they are losing population like anything. Every 20, 30 years, their population will go down by, say, 20%, right? On the other hand, India has this demographic advantage, right? So if we would like to participate in this growth, definitely we have to invest, right? So saving will not be enough. If we'll invest, then only our money will say, multiply. So coming back to the point, yes, you should keep, say, some amount in fixed deposits. And if you are a businessman, definitely you are taking a lot of risk on that side. So you can be conservative in case if you want, but you have to diversify. You have to participate in India's growth story, and investment through mutual funds or direct equities, definitely you should do that.
All right, fair enough. And I want to bring up a scenario many of our audience members may find themselves in, wherein if they are entrepreneurs or individual proprietors, they may be perhaps blurring the lines between personal cash flow and the cash flow that's tied to the business. It's very natural to do so when you are running your own shop, right? What words of advice do you have for someone in that situation?
Yeah, so good you bring this point. I think this is the biggest mistake that business owners do. They are not able to put that line there, okay? See, when we create a private limited company and they call it a different identity, right? We as a business owner should understand personal finance and business finance are two different things, okay? And every industry, be it say travel or any industry, they'll have a lot of risk. In case if you're investing everything again, reinvesting everything in your business, right? Things will be tough for you, okay? So you have to put that line. You'll also would like to retire at, say, some point of the time, at least financially speaking. So you should diversify. You should try to pull out, say, 20, 30%, 40% of the money, okay? And invest that on year basis. Definitely your business, I think, and that's the reason we all are in business, because we love that. We know, yes, this is going to make huge money in long term. And this is, again, our passion, right? Yes, we should put, say, 50, 60% reinvest that money, but yes, we have to draw that line and invest a lot of money to take care of, say, our kids' education, the basic responsibilities that we have. We should also have, say, some emergency funds. And being a businessman, and a lot of times cash flows can be, say, volatile for a businessman, as this industry is talking about. Yes, they have seasons, so winter is amazing for them and summer is not. So they should have at least, say, 6 to 12 months emergency fund kind of thing, right? So these basic stuff should be there.
Sure. And Hemant, what do you consider to be some of the most commonly made mistakes, in your clientele? Without divulging any details, what is it that you see and cringe over and over again because it's so avoidable, and yet people fall into the trap of repeating that financially unsound behavior?
So I think the most common thing that keep coming is, I mean, people spend a lot to keep up with the Jonases, right? So just to show off. And we North Indians are actually infamous for that. Okay, so I was talking to a friend in Mumbai, and he said, "Yaar, aap log bahut dikhawa karte ho." Okay, so even if we don't have money, we try to spend. Okay, so last week I was in Ahmedabad, and I was shocked. Means definitely Ahmedabad is a bigger city than Jaipur, almost double the population, lot of money, lot of businesses. I hardly saw any, say, Merc, Audi, BMW on the roads, right? And I'm sure even in this parking there will be a lot, right? So I think that this is one of the avoidable things, right? So you should try to make sure, yes, means sometime definitely a lot of these decisions are emotional decisions, right? How long you'll discuss with, say, financial planner about that, or maybe, say, your wife. But when wife will put, okay, we have to buy a bigger house or a jewelry, right? So means that is the priority. So coming back to the point, yes, you should not spend money just because you would like to show off that. So I think this is a very common mistake.
And in the current scenario where volatility is fairly unpredictable, right? Gold and real estate are considered to be very safe havens, right? And in the current scenario, of course, the other thought is, okay, while they are safe havens, I've missed the boat, right? It's too late. So I'd love for you to address both points here. To what extent is that a misnomer, or are they in fact safe havens, and how much does timing have to do with it?
Okay, so that means definitely gold is considered safe haven, and there are reasons for that. So whenever there is a global uncertainty, so gold is really helpful, and people should have, say, 5 to 10% of their, say, investable assets in gold, right? Prices definitely that can be volatile if these global tensions ease. Definitely that may come down, but that is not the point. Point is asset allocation. What kind of asset allocation you can keep throughout your life? Okay, we don't construct a house for, say, winter or summer. We construct a house that will take care of all the seasons, right? So similarly, we have to construct a portfolio with a combination of, say, real estate, gold, say, your fixed deposits, and say, equities, right? So we should have that kind of combination. See, volatility is always there, right? There are always reasons why markets will fall, and I'm talking about equities because I think ET and we actually more focus on, say, equity part. There will always be a different, say, headline, okay, a different reason. So the way we look at it is, yes, are we going to become US in, say, 15, 20 years, or are we going towards becoming Afghanistan, right? So if we are going to become, say, US, right, so it is better that we participate in that growth. Yes, a lot of people will feel, say, missing out on all these three, means definitely even real estate, and numbers are really shocking. People who have missed the bus, these are crazy numbers, and they can't afford properties right now. But similar is with equities, right? So if people haven't invested in, say, 10, 15 years, definitely they have missed a lot. But the thing is, 20 years back, it was the best day to invest in equities. And the next best day is today. So,
well, that makes for a wonderful note upon which to close, ladies and gentlemen. Huge round of applause for our financial expert, Hemant. Well, that brings our coverage of the Leaders of Tomorrow Springboard here in the city of Jaipur to a close. I'm Pooja Jain signing off. Thanks for watching.